IRS business expenses, where your home is used for business purposes. Where a taxpayer uses part of their home for business, the taxpayer may be able to deduct expenses for the business use of their home. These expenses may include mortgage interest, insurance, utilities, repairs, and depreciation. According to the Internal Revenue Service, to qualify to claim expenses for the business use of their home, the taxpayer must meet both of the following tests. 1. The business part of their home must be used exclusively and regularly for the taxpayer's trade or business. And 2. The business part of their home must be A. The taxpayer's principal place of business, or B. A place where they meet or deal with patients, clients, or customers in the normal course of their business or trade, or C. A separate structure not attached to their home used in connection with the taxpayer's trade or business. It is the IRS's position that a taxpayer generally does not have to meet this exclusive use test for the part of their home that the taxpayer regularly uses either as a daycare facility, or 2, for the storage of inventory or product samples, provided that the following tests are satisfied. The taxpayer sells products at wholesale or retail at the trade or business. B. The taxpayer keeps the inventory or product samples in their home for use in their trade or business. C. The taxpayer's home is the only fixed location of their trade or business. D. The taxpayer uses a storage space on a regular basis. And E. The space used is a separately identifiable space suitable for storage. A taxpayer's home office qualifies as a principal place of business if they meet the following requirements. 1. The taxpayer uses their home office exclusively and regularly for administrative or management activities of their trade or business. 2. The taxpayer has no other fixed location where they conduct substantial administrative or management activities of their trade or business. Meanwhile, should the taxpayer have more than one business location, determine the principal place of business based on the following factors. A. The relative importance of the activities performed at each location. B. If the relative importance factor does not determine their principal place of business, one must consider the time spent at each location. The following chart provided by the IRS to help determine can you deduct business use of the home expenses can prove particularly beneficial. One starts by asking, is part of your home used in connection with a trade or business? Where the answer is no, then there is no deduction. If yes, you go on to the next step. Are you using the part of your home as an employee? Here, if the answer is yes, once again, no deduction. But if no, you continue on. Is the use regular and exclusive? Here, if the answer is no, once again, no deduction. And yes, we continue on. Is it your principal place of business? If the answer is yes, then the deduction is allowed. If no, we must then ask, do you meet patients, clients, or customers in your home? Here, if the answer is yes, then deduction is allowed. If no, you must ask the final question, is it a separate structure? And here again, yes, then the deduction is allowed. If no, there is no deduction. The taxpayer then needs to proceed to determine the deductibility of the particular expense, with the following table providing the IRS's perspective as to deductibility. Types of expenses. Direct expense. Expenses only for the business part of your home. Examples, painting or repairing only in the area used for business. Deductible in full. Exception, may be only partially deductible in a daycare facility. Indirect expense. Expenses for keeping up and running your entire home. Examples, insurance, utilities, and general repairs. Here, deductibility is based on the percentage of your home used for business. And finally, unrelated expenses. Expenses only for the parts of your home not used for business. Examples: lawn care or painting a room not used for the business. Here, there is no deductibility. And as noted in the tip, IRS Form 8829 and the worksheet to figure the deduction of business use of your home is how one proceeds to optimize one's business expenses in the home in conformity with the IRS's prerequisites. One then proceeds to look at the worksheet, looking both at determining the percentage use of one's home used for business purposes by taking the area of the home used for business and dividing it by the total area of the home to give one the percentage, and then looking through a series of allowable deductions and making determinations based on the IRS's worksheet as to direct expenses and indirect expenses based on the prior table that we went through. Furthermore, the IRS does provide an optional safe harbor method, which doesn't rely upon the taxpayer determining the amount of deductible expenses attributable to certain business uses of a principal residence during the tax year, without calculation, allocation, and substantiation of actual expenses. Instead, the optional safe harbor method is limited to a maximum of $1,500 per year based on $5 per square foot for up to 300 square feet. Under this method, the taxpayer is entitled to claim their allowable mortgage interest, real estate taxes, and casualty losses on their home as itemized deductions on Schedule A, Form 1040. The taxpayer is not required to allocate these deductions between personal and business use, as is required under the regular method. However, it also needs to be noted that if the taxpayer uses the optional safe harbor method, they cannot depreciate the portion of their home used in a trade or business. Business expenses unrelated to the home, such as advertising, supplies, and wages paid to employees, remain fully deductible. All of the requirements previously discussed as to the business use of their home still apply. For more information on the deduction for business purposes of your home, including the optional safe harbor method, one should refer to IRS Publication 587. Taxpayers must also remember that if they were entitled to deduct depreciation on the part of their home used for business, they cannot exclude the part of the gain from the sale of their home that equals any depreciation they deducted or could have deducted for periods after May 6, 1997. This remains but a very brief summary of the IRS's available deduction for business use of one's home, including the optional safe harbor method, with IRS Publication 587 being an important resource for further information, together with obtaining professional advice from knowledgeable professionals. Thank you.